Hi everyone, and welcome to our final video for Chapter M2. So far we have successfully costed a job. We traced direct materials, like the oak lumber, direct labor, Jane working on the table, and most importantly, we've applied our estimated overhead to our jobs using our predetermined overhead rate, or POHR. In this problem, we said we're estimating $200,000 of overhead, and we estimated $20,000 hours of our workers working on custom furniture. And so that translated into $10 per hour of overhead for every hour that our workers were building furniture. This leaves one big practical problem. All year long, we've been using an estimate. We estimated the total overhead. We estimated the direct labor hours. At the end of the year, what happens when our actual bills come in? What if our actual factory electric bill or actual supervisor salaries or actual factory rent didn't add up to exactly $200,000 like we estimated? What if it actually added up to $210,000? What then? So our estimate is never going to be perfect. And so we have one final cleanup journal entry to make to reconcile our estimates with reality. So the best way to visualize this is using a T account for manufacturing overhead. And I'm going to abbreviate that MOH. So when we get the actual electric bill, the journal entry is going to be debiting manufacturing overhead, crediting utilities payable. So let's say we get a $20,000 electric bill. When we pay our factory supervisor's actual salary, we'll debit manufacturing overhead and credit wages payable. Let's say that was $70,000. And when we use actual indirect materials like glue, we might debit manufacturing overhead and credit direct materials. Or credit the raw materials inventory. So we might have a few entries like this. So that's 90,000. Let's say our rent was 110,000, and we had $10,000 of other manufacturing overhead costs, adding up to not 200,000 but 210,000. So all year long, though, we have been using $10 per hour. And so let's say, and we could also be wrong. So we are wrong on the $200,000 of overhead. It wasn't 200,000, it was 210. We could also be wrong on the number of hours. Let's say that we worked 19,000 hours instead of 20,000 hours. And so whenever we apply overhead to a job, the journal entry is debiting work in process and crediting manufacturing overhead. So we can see the debit side is going to have the actual costs, and the credit side is going to be the estimated applied costs. And so if we had 19,000 hours instead of 20, we were doing $10 per hour, and so that would end up at 190,000. So we can see that we actually have $20,000 left in manufacturing overhead. We're supposed to have zero. So what do we do with this extra 20,000? Well, if our goal is to get it to zero, right now we're sitting at a $20,000 debit because our debits are much larger, so they're $20,000 larger. We need to get rid of that. So we need to credit manufacturing overhead, 20,000. We need to debit something 20,000 though. And so where is this actually going to go? we are going to put it into cost of goods sold. Now, we can't apply this specifically to a job, because that time has passed, we're just trying to fix the financial statements so it has the correct cost of goods sold on it. $20,000 off, I don't know if that's good or bad, but in this case, we're like, that sounds like we're about 10% off on our estimates at the beginning of the year. And next year, we might try to do better at our estimates. But having an estimate is probably better than not doing anything at all, right? So having to fix this at the end of the year isn't that big of a deal. This easily could go the other way. Sometimes we will have more estimated costs than actual costs, so we'll have to reverse this, where we debit manufacturing overhead to get the balance to zero and credit cost of goods sold. All right, so this cleanup entry is the final step in the job costing cycle. And all year, we use an estimate to apply overhead to jobs. Again, that is when we are crediting manufacturing overhead. And at the end of the year, we compare our actual, which was the debit, to the estimated and find out, did we underapply or did we overapply? And so we debit or credit manufacturing overhead to get that to a zero balance and put the difference in cost of goods sold, whether that's a debit or a credit. So this final entry ensures that our income statement is accurate and that our temporary manufacturing overhead account is zeroed out for the new year. So congratulations, you have now followed the entire flow of costs in a job order costing system, from raw materials all the way to finished goods to clearing out the manufacturing overhead account.